take the plunge. Number 2 is a total stock market index. The total stock market index has returned investors an average of 13% each year over the last 10 years, which isn't bad at all. It's the definition of diversification. You can't really get any more skin in the game for a lower cost. If you want to invest for a long period of time without having to even check or even think about it, then this is most likely the fund for you. Investing in everything means you can experience gains across the entire market, and unless a crazy crash happens, you should be okay. But even if it does crash, with time, things tend to bounce back. I've seen 3 crashes since I've been an investor: the dot-com bubble, the 2008 financial crisis, and the 2020 COVID crash. I'm not going to pretend these crashes didn't hurt, but long term, every market I've invested in has bounced back. The downside to this index is it depends on the entire market trending upwards. This means there could be an individual stock that you really believe in that goes to the moon, but you might not experience those gains because that stock doesn't play much of a role within the index fund. The best I've found in the USA are the VT Sachs Index Fund and the VTI ETF. And the best in the UK is the VWRL ETF. Number 3 is the Emerging Markets Index. Emerging markets are predicted by some experts to be on the rise. And whether I agree with this or not, I think it's important for me to have at least a little bit of exposure to these markets. It's all well and good buying the S&P 500, but when China or another emerging country has some great gains, you'll end up missing out. Just as an example of this growth, when I first traveled to China around 20 years ago, I looked into buying an apartment in Shenzhen. That real estate was $47,000 and now it's worth over $1 million. This just shows the potential growth in these markets. Emerging market funds are definitely the most risky type of index funds we've discussed. These funds include stocks from lots of different growing markets and can be very heavy with Chinese companies. Taking a look at a list of the largest economies in the world, a lot of them are emerging markets. So it just makes sense to me to throw a little bit of money in for diversification. The best I've found in the USA is the VEIEX ETF, and in the UK, the VFEM ETF. But there are also lots of other emerging market funds available, so it's worth having a look around.